Hey, ladies and gentlemen, good morning, good afternoon, good evening, ladies and gentlemen. My name is Dr. Greg McLeod with Elite Traders University. It's time for our Bulls versus Bears, the weekly Forex trading forecast. And we're going to get started in momentarily. Just going to get you share my screen. And we're going to go right to the economic calendar. I check the economic calendar first, and in order to get a perspective of what's going on for the rest of the week. The economic calendar actually is the driver of currency movements. And so we can use that to our advantage if we know what's going to happen ahead of time. Being able to forecast price action before it happens is an edge that traders have, even though they say, oh, you're not supposed to trade what you see. The truth is, if you trade what you see, you're late to the party. How many times have you ever gotten to a trade, you thought it was going the right direction, but then all of a sudden it turned on you, right? Because you're late. And so we try not to be late by kind of anticipating, using the news, using the clues, the candlesticks, everything that's giving us the message, including our proprietary indicator, the predictive function, to be able to get us in 4 or 5 bars ahead of the crowd. If you want to find out more about the predictive function, make sure that you click the link below so you can register for a free strategy call with a member of my team, and they'll tell you more about that. Also, ask them about how to get a 6-figure trading account, even though you have no money in the bank, absolutely free. And he'll tell you about that. Okay. Anyway, let's go ahead and share my screen and get you right into that. Okay, we're going to share with you what my one of my top secret trading tools I use, my market heat map. It's arrangement of currency paid by percentage change. It tells you what's happening, what's popping, what's dropping, what's not in the market. But it's also a suite of tools, economic calendars, Forex TV, financial news stream, market hours, technical screener, and a whole host of tools. So I don't have to jump around from website to website, wasting time and just open a bunch of tabs. I can have it all in one spot. We can actually see what's going on with the Forex majors right now. It's daylight savings time, and we can see that that's Asia session and things are a little dull, right? So I don't want to trade a dull market, even though I do have some ways. I'm teaching at my Las Vegas Forex Mastermind, which is going to be April 2nd, 3rd, 4th, and 5th. And if you would like to there's still a few seats available, nearly sold out, counting down to our price increase. So make sure you join me for live trading at beautiful Las Vegas Mansion. We're going to be looking at, you're going to be able to look over my shoulder and watch me trade live. We're also going to have some this is a trader's mind hackathon. So we're going to actually have a hypnotist and a yoga instructor and a whole bunch of the different things in order to put on the mind, put it on a trader's mind. Because a lot of times we know what to do, we just don't do it. And it can be a lot of self-sabotaging beliefs and things like that. And so we're going to get to the root of the issue and trade live. And we should have some fantastic results. In fact, the schedule is going to be fantastic. Sunday, we're going to kick off with a Top Golf networking dinner, games included. And then on that Monday, we're going to have an early bird trading session at 6 a.m. And then we're going to have our London VIP trading session. We're going to be trading the London session, which is midnight Pacific time for our VIP upgrades. And then Tuesday, we're going to do our training from 8:30 to 4 p.m. Then we're going to have a Brazilian steakhouse dinner. And then we're going to have another early bird session to wrap things up on Wednesday and a cocktail party at the end. So get your tickets. You can click the link below and you can find out more information about the Las Vegas Forex Mansion Mastermind. We're going to be trading live. So make sure that you get your ticket, be there or be square. Recordings will be very, very expensive. So you want to get it the day of the event, okay, or day before the event, in fact, okay. Anyway, let's get to my market heat map. Range of currency pairs by percentage change. We see that nothing is really moving right now. Okay, and just want to make sure that we're sharing the right screen. Awesome, cool. Okay, let's go ahead and we're going to go right into the economic calendar and see what's up. And this makes it really simple what to trade one of the biggest problems that traders face is not knowing what to trade. And so we very simply go to the economic calendar, and you can see, what's going on? Sunday, March 12th, we got a housing index, and it's medium. I just filtered all these the economic announcements coming out for the week. I filter them by high and medium ones. Those are the ones that are going to be big drivers of currencies. And I just look at the flags. The numbers I'm not too concerned about. I just want to know that these are what people are going to be focused on, and it will give us momentum into the move. Now, trading the actual time of the event, maybe not, maybe an hour beforehand. If you're new, if you don't have the predictive function, you don't have the suite of indicators and things. We train our students on how to trade the news and how to trade it profitably, consistently. If you don't have those things, then it'd be quite dangerous to be able to trade the news of the time of the announcement. But you want to maybe wait an hour after the announcement, or if you look at a couple of days before the announcement, usually prices start to move just before the announcement, a day or so before, so you can plan ahead. So what we're going to do is our plan for today is we're going to look at those currencies which are in play. In play meaning that they're going to catch somebody's attention because their flag is right there, right? So for instance, we have the New Zealand dollar and we have a flag. So what we're going to do is look at the New Zealand. Now it is March 12th, and the news already came out already, but it's after an hour afterwards, so we can actually see that the New Zealand dollar might be in play. And then next one, we're going to look at the euro, and we're going to see, that's going to be in play. And the Australian dollar, that flag is there. And the pound, we're going to look at the UK flag and see the pound is going to be really majorly in play on Tuesday, 3 a.m., Tuesday, March 14th. They have average earnings and a whole bunch of other things too that we're going to be looking at too. Average earnings included, unemployment rate, claimant count change. So I would think if you were trading anything this week, that the pound, there's lots of pound data coming out on Wednesday as well. And so the pound will be a significant currency to be trade. I know many people said, if there's a lot of news in it, then you should just find something else to trade. Well, that's where the activity is, and that's where liquidity is. And think of news like a rock, and when the rock hits the water, it creates a ripple. And that ripple, we trade the ripple. If there's no ripple, then you get a market that is like fairly flat and boring, and there's nothing going on like this, right? This is a rippleless market, right? Where everything is gray because all the activity shifted down here. Look, why? Because we just had Australian news. So look what's moving. Aussie CAD, Aussie Swiss, Aussie dollar, Aussie yen, there's Aussie Swiss again. Okay. So you're getting the picture that we're getting the Aussie, and then we're getting Kiwi yen. We're getting that section of, it's also Asia, and so it's that time of that area of the month. So we're already starting to move in those pairs that are in the near in the Asian during the Asia session, right? And Kiwi CAD and things like that. So you can see that the euro and Aussie are moving, and those are the flags that were showing up. Those things are moving just beforehand. Now, after the party is finished with these guys, the next thing is going to be the pound and the UK, the pound pairs, pound yen, pound Swiss, pound Aussie. We'll see those in play as well, with average earnings, bonus 3 months for the year. I guess why do we say quarter? A quarter is usually 3 months. Q on Q, maybe. ILO unemployment rate, that's coming out. The claimant count change and average earnings, excluding bonus, that's coming out. And then at 8:30 a.m. on Tuesday, we're going to have lots of U.S. inflation data. We have CPI, or the Consumer Price Index. Think of the I in index like means inflation. And month on month is not your mom, but month on month, not your mom. CPI, Consumer Price Index. And so it's roughly estimated that the inflation rate is falling, that the interest rates are having an effect, as we saw that non-farm payrolls. We have big non-farm payroll on Friday. a lot of people are throwing off because usually non-farm payroll is the first Friday of each month, but this time non-farm payroll actually came out later because February had 28 days, so you had a shortened month, so they gave some extra days the next week for non-farm payroll. So we had non-farm payroll last week. The previous number was 517,000 for the month of January. For February, it was revised. For the January number was revised down from 517 to 504, and the actual number for February came out at 313,000 jobs, which is better than the 214 forecasted, but still lower than the previous number, which is showing that if job growth is slowing, interest rate hikes are actually working. Okay, they're working really well. But you don't want to work if you want a Goldilocks economy where you're not creating too many jobs, creating too much inflation, but you're also not crushing, killing the goose that lays the golden eggs by stopping job growth with too high interest rates. So the Fed is walking a tightrope here, and so we're going to be looking carefully at this inflation data. If that data, because the Fed is going to be data dependent, they're going to be watching this inflation data. If that inflation comes down to target, which is 2%, they have a 2% target right now. Inflation rates, hovering like around the 6 or 7% for CPI, 6.4%. They're actually forecasting a drop to 6.0%. If we do have a drop, that's going to actually be bullish for the stock market, bullish for risk assets, and bearish for the US dollar. So it'll be very interesting to see what comes out on Tuesday. So based on what's going on in the market, we might actually see this number come down lower than expected. And if it is, then that could spark a really big rally. Statistically and traditionally, March is a bullish time in the stock market, usually bearish for the US dollar based on seasonal patterns. And we teach seasonal patterns in our mentorship, the compound day trading course and the Pip N Run Forex mentorship. We teach that. And if you want to find out more about how to get professional grade instruction from myself, a 27-year Wall Street veteran, then go ahead and click the link below and book a time with a member of my team and see if it's right for you. Now we move on. Now we've got the retail sales, very important. If we're trading that with US flag. Now, the US flag, there are a couple of things you can trade. I like trading the euro because the euro is regarded as the anti-dollar. And so I'll look at trading the euro dollar, the euro versus the US dollar, or EURUSD is the ticker. And I'm looking at if we have lower interest, lower inflation, then we can probably see a rally in the euro USD. We can actually see euro USD move higher. However, if inflation is higher than expected, the CPI number is higher, I would expect the dollar to strengthen and the euro dollar to actually drop. So that's the thing that you would want to watch out for. But I think they pretty much have this already mapped out based on seasonal patterns that, they'll probably have weaker, lower than expected CPI data and PPI data, which is the producer price index. And that is the prices that the producers charge, wholesale prices. And so we'll see that drop. And if we see that drop, then it's going to, maybe be the Fed won't be so hawkish about jacking interest rates higher, because they say that they're actually, the two mandates of the Fed are price stability and job growth. And so if one gets out of control, then, it's like a brake in a gas pedal, right? So if prices go crazy, then they take the foot off the accelerator on they put the brakes on the job growth, right? And if all of a sudden prices are falling too much, then they increase job growth. So they're constantly they got two levers, job growth or inflation, right? And so that's what they do. So euro, dollar Swiss is another good one to look at. Sometimes it can be tricky. The Swiss National Bank burned a bunch of people back in 2015. And a lot of people aren't really happy with them, and their currency doesn't do that well. So the euro dollar has also another they call it the loonie for a reason. It's kind of crazy, but dollar CAD, sometimes it moves in line. So if we see lower than expected CPI, expect the dollar CAD to fall as well. Okay, moving right along, the next flag is Kiwi, the New Zealand dollar. Call it the Kiwi because that's the bird, not the fur, not the little fruit that has a little fur on the outside of it, but actually the bird. It looks like the fruit with a beak and some feet. GDP, and now GDP out of New Zealand is coming out, and expected to fall from 2.0 to negative 0.2. That could be bearish for the currency, and that could be very interesting as well, right? So we want to watch that. That after we get this spat of U.S. data, including retail sales. Retail sales is very important because 72% of our GDP is made up of sales. And if we're not selling anything, people are buying, the economy doesn't do that well. So the whole idea here is to watch this. A lot of economic growth going on here. And usually springtime, it's getting warmer. People like looking forward to, summer driving season, and a lot of things, it's kind of thawing out right now, warming up a bit in some places. And so usually the economy does a little bit better going into the springtime. Okay, we have some Japanese data. Just don't really pay too much attention to Japanese data. You have the Bank of Japan. They're committed to a weaker yen. I know a lot of people saying, oh, the yen is going to strengthen, yen's going to strengthen. They have a debt to GDP ratio of 200%, which means they are basically, they have this mountain of debt. They don't have any immigration. Birth rates are low. So they'll have an aging population that is relying on social services, and the very low interest rates. It's just not a very good, even though they have like cool electronics, cool movies, and anime. A lot of really cool stuff there. But the underlying fundamentals of the economy are very disastrous. And so they're on a treadmill with having to keep a weaker currency in order to actually sell more products to the US and to other countries, because they are an export-driven economy, and a strong yen would be devastating to their economy. So they're finding ways of creating more QE, trying to find some way of weakening the currency even more. So anything that comes out here which strengthens the yen, I would be looking at fading it, taking the other direction. So moving right along, 2030, which is going to be like 8:30 Eastern time. Lots of Australian flags here. Unemployment, you have employment change, you have full-time employment, and the RBA bulletin. These are all high to medium impact items. And employment change, they're talking about a move from negative 11.5 thousand to 49.7. So move from negative to positive could really shoot the Aussie dollar much, much, much higher. And you can see from the chart that the institutions already positioned themselves for a long Aussie. So you want to check that out. People are asking me about this and that and the other thing. Pay attention to what I'm telling you right now. Take a look at the Australian dollar and watch it. Put it on your watch list. Put Aussie dollar on your watch list. Open the chart. Keep your eyes on it. Set alerts and alarms at certain areas of resistance, areas which will break. And if they break, that's a sign that the bulls are in force. Don't just listen to the broadcast, like going one ear and out the other. And oh, Greg, you said that. Wow, I should have. Slap. Pay attention. You won't make any money at this business. It's like, if you got a good system and you got a good play and you don't trade it, what's going on upstairs? All right. And then that's where we go into Las Vegas, and we're talking about it's called a mastermind, because we're going to talk about mastering your mind. Master your mind. This is the Las Vegas Forex Mastermind. We're actually going to, it's almost sold out, like I said, and we're going to talking about I'm going to walk you step by step through my trading system. You get to look over my shoulder. But not only that, we're going to give you practical tools that you can take away from this for changing your mindset and programming it to put the software you want in your computer up here so you can execute trades properly, okay? Because most of the mistakes you're making are mental and they have nothing to do with the system. It really doesn't matter. You can have a 100% system, but if you're whacked in the head because you're distracted by kids and family and bills and marital issues and all this other stuff, there is no way you're going to be able to pull the trigger and make any money at this business unless you get your mind straight, right? Get your your mind and your money and your money and your mind, right? And come to this trader's mastermind so you can straighten your mind out. Okay, with that, let's go right into the charts and see what's going on. And we'll start off with our charts, okay? That's the S&P 500. We're not going to go there. Let's go start with, I always start with the DXY, which is the US dollar index. DXY. It's a basket of currencies versus the US dollar. And so this gives us an idea of what you can't really trade this on any platform I know of, unless you have a CFD with a foreign broker that allow you to trade CFDs. You can trade the US dollar index. But we're just using the US dollar index as a way of just seeing what is going on in a 50,000 foot view. We're like this, this is like a military operation. We're going to put satellites. We're going to get some reconnaissance. We're going to get an overall view, 50,000 foot view of what's going on in the market. Okay. So I'm sorry, I want to trade on my phone because it's so cute and so portable, but you can only see this much data, right? It's like looking at the trunk of an elephant and thinking it's a snake. You can't even see the whole elephant. You don't even know if it's an elephant. Why? Because you're looking at too small an amount of data. Okay. Price data, this is a bunch of, this is 6 years of price data, right? Or not 2024 yet, but there's 5 years of price data. So we can know where price has been and where it's going, okay? You can't do this on a phone. I'm sorry, unless you have a really big phone, right? So, but we're trying to look at this like, okay, there's an uptrend here on the monthly chart. So this has been very bullish. Why? Because Jerome Powell's raising rates, raising interest rates. Higher rates, the dollar is worth more. I'm sorry, you crypto people. I'm sorry, when the thing is going up, this isn't going to work, okay? It's trading in pairs. It's BTC versus USD. So as long as USD is going up, BTC is going down, okay? So you can be a hodler all you want to. You be hodling your way into a bankruptcy. Anyway, be a little more cheerful. Let's go ahead and go on to drop down to weekly. I care about you guys, so I'm being your coach. I'm being in your face. I'm being serious to wake you guys up because I can't physically slap you. No, I wouldn't. But back in the day when you go Bob, they say that the brokerage. My boss Tom Long used to say, "Don't go Bob, Greg." I go, "Who's Bob? My name's Greg. Who's Bob?" Bob means don't believe your own BS. And he didn't say BS. He said the other word. He said bullshit. Okay, you guys, I speak a little French. Okay, so don't believe your own BS. Go Bob. He went Bob. So you don't want to go Bob. So you want to be able to look at this from an objective point of view and look higher highs and higher lows. We bounced off this area. We hit this 38% retracement. We'll find a little bit of resistance, and we may come down a little bit, right? Because we rejected here. Well, this is a full body green candle here, right here. That doji was a full body green candle, and they would smack down. So I'm gonna instant replay. Bah, 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 bah. So this was our full body. It was a full body green candle. Bah, 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 bah. And then bam, smack down, leaving just a wick, right? That's what happened to that. It was a full body, got a lot of people sucked in. Look, buy the breakout. It's going north, right? At the 38% retracement, rejection. So we have this rejection going on. And I'm not talking about rejection from your first girlfriend or something like that. I'm talking about rejection from resistance. And so now we have a high, a lower low, and right now a lower high. This is a weekly chart. We're starting the new week. Right now, we're in a bearish kind of formation, but if we could break, what we have here is like a little bit of a triangle, right? And triangles are usually, they mean like, it's like a question mark at the end of a sentence. Am I going to go up or am I going to go down? This is a question that's being asked. Why? Because we're stuck in this indecision triangle, right? So we're either looking to break out, or if we break below the lows, the skin comes back down. I'm looking at also the larger move where we had a high, a low, a lower high. And so the bears are going to try either take this to a lower low, because then we'll have a new trend starting if we break the low here at 188, right? But we're going to be, if we don't get above this old high here of say like 105.80, then we're probably going to be heading down. Right now we're in a little bit of a range, and we're either looking to maybe retest the low or take that low out or break out from this high and head higher. We could probably head even higher, right? So it really depends. So they're waiting for the news to come out. When that news comes out, then they'll take their direction. This is a weekly chart. Let's drop on down to a daily chart, and we can see that we've got this higher highs, higher lows, and we've got this kind of flat thing going on here. And we break down through this area, then we can see a cascade on down, right? Probably gonna be very data dependent on the news. And we can even go down to 4-hour chart where the dealers live, and we can see we have like a descending triangle. A descending triangle is pretty bearish. It's like, because what happens, it can't get out of its own way. It's trying to go up, and it comes back down to the same low, tries to get up, comes back to the same low. And so we look for this thing to break. We can actually do a measuring objective. And in the course we talk about chart patterns and things like that. And if we were to clone that projection from the high and project that down, hey, look, it takes you right back down to this retracement here, right? So we're looking at that level to be broken, a 104.08. I'm bearish. Bulls versus bears. I'm bearish the US dollar, and a lot of people listening to Jerome Powell and the news and the inflation. But remember, it's all priced in. The market is a discounting mechanism. So what will happen is the market, when everyone believes something and it's already priced in, then it does the opposite, okay? Because it has to get the most amount of people on the wrong side of the trade in order to pay the winners, okay? So you don't want to be on the wrong side of the trade. So don't be a sucker. Okay, let's go on down. We got some euro data. We got a little bit of we have US data, which is euro. I'm actually going to go to EU or USD, which is the anti-dollar. So we can make a mental comparison, and we can see that this is just like the US dollar index. This turned upside down. If we go out to a monthly chart, we're gonna go to a 50,000 foot view, and it looks, we've got levels of support and resistance that we can we can draw classic support and resistance. We can use Fibonacci. We can see that we have levels, right? So what happened? We came down to this level, and then buyers stepped in and pushed price up. To, if we took a fib from this old swing high from July 1st, 2008, that's a long time. Can you imagine that? That's some 15 years ago. Like, I got pants that old. Okay, anyway. So we bounced up to the 23% retracement, and typical bounce is a 38% retracement, a 200 moving average. So we're kind of coiled off this low. So we were in this range for a really long time, for almost the low of 104.14. We've been in this range for 5 years. It's a 5-year range. We broke, and then we broke back into the range, and now we're, this is like an overshoot. And we may see price come back into the major part of this range, maybe up to the 123 area. But we just got to break this 110, 110.26 area. And this is where like a median line, it's almost like the average price of the last 5 years or so. So if we break this area, that's like 7 years. So if we break this area, break this high, we'll be back into this range. And because this was an extreme, and usually we come down to the bottom, we rally up, and down to the bottom, we rally up. And now we're in the extreme bottom. So we get an extreme bottom. Usually there's for every action, there's an equal and opposite reaction. So we look for a reaction back up. Now, I mean, we're not going to hit that overnight, but over this March and April time, we'll probably rally back up, and then we probably see a move back down going into May. Okay. So bulls versus bears on the euro. I am bullish the euro. Okay. Maybe like short term bearish, but medium term bullish on the euro. Let's go to the Aussie dollar, AUD USD. We have AUD USD. I'll take you AUD USD. Okay, here's AUD USD. And I'm going to remove all drawings, start from super clean. Now, here we have this huge reaction here. This is our COVID low. This COVID low spike. Can you imagine, COVID into the world, and then everything shoots up and then back down. But if you look at me a higher low, right? So the structured people say, yes, Greg, that's right, higher low, right? We also have descending highs, right? But we have this trend line. Usually there's 2 points to determine a line. That's your geometry 101. If you didn't sleep through geometry or didn't ditch the day they were talking about this, right? So that's 1 point on the line, 2 points on the line. Usually we need a third point on the line to actually test the line that was formed by these 2 points. Point 1 and point 2 form the line. Point 3 is where price actually confirms the line. And that's what traders usually look to get into at a point on the line for a bounce off the line, right? That's what we're looking for. So think of like taking a rubber ball and bouncing it. This is the ball, price of the ball. We're looking for a bounce and a bouncer. So this is how you could get long here and lose money. This is how you can get short here and lose money, right? So you got to look at, the structure, what's going on here. So, and this actually even may make a higher, this is a monthly chart. So let's go to a weekly and take a look. Okay. When you see the weekly, we bounced off the 200, and then we have this, we have this possible touch. We can hit a rapid move down to the, down to the, what's the old low here is 62.40, but and we'll see. If buyers step in, we have news coming up, but then we have this new candle that came up, and this new candle is quite bullish. It's like a little harami. It's like a little baby, and I know they tried to harami the other. Usually haramis are pretty reflective of a reversal, and it tried the harami and it didn't work. It tried again. It tried 1, 2. This could be the third harami, and we need to see a break above 66.42 for this to be bullish. Bulls versus bears. Ooh, this is a tough one. This is kind of a toss up. We're sticking around support, but we've got that trend line there, and we're making our structures are like lower highs and lower lows. We have a trend channel, a very well-defined trend channel, but we're at the bottom of that channel, and maybe we bounce from the low of this channel back up to the top of the channel. So I am bulls versus bears. It's a tie on this one. If I were, because if you throw a fib on this from the low to the high, I think that's my tiebreaker. Well, we're sitting at the 618 Fibo right there at the 65.51. Yeah, and we've got lots of lots of candles there, and every time we get a consolidation here, we get a break south. So I'm gonna go bearish, but this is one of those where we've got overhead, we're below the 200, we're trending down. I would probably lean bearish, though not too convincingly bearish, right? Something like this I would skip, okay, because it's not clear. This is something that it's not. I mean, you can say, well, Greg, it's clearly a downtrend. Yeah, but every time this thing has gone down to the trend line, it's bounced up. So, and it's bouncing up kind of slow right now. So why would I want to get into something where it bounces up and I lose money, right? So just stand aside. Go to the 4-hour chart, and yeah, it's like a few bars away from touching that and dropping. Okay, let's go to the New Zealand dollar. And I was hoping that something would be a little bit more clear on that, considering that we have that seasonal. Now this is a little bit more clear. If you go to a monthly chart here, and I'm going to remove all the drawings, and we can see something here where we had a double bottom, a very clear double bottom on the monthly chart, which gave us quite a big jump from the lows of the near the 5507 area. We bounced up to 6498, but we bounced down. But we have a low and a higher low. We just need a higher high, right? And we have an upper trend line there on the monthly. Drop it down to weekly. So it looks like we could get, if we get a break of this trend line here, right, and that break takes us around like 62.42, we could come back and retest the 200 moving average, right? So that's on the weekly. Go down to a daily, and you can see that momentum is slowing down. The 200 moving average kind of slowed it down a little bit. We're in the top of this trend line. That trend line, if it breaks, then we have a good chance to push higher, and because structurally we'll have a higher low. We're also bouncing off of a key level of support from the low of 55.10 to this area here, and we're sitting right on the 38% retracement, kind of like dangling with it, and we need to break. If this level can hold of support, 60.76. If that breaks, though, we can see a collapse down to 59.002, right? So everything's probably really dependent on this CPI data that's coming out, more so than the other data from other countries, right? So that's New Zealand dollar. Bulls versus bears. I am mildly bullish. Okay, and so in fact, I would probably choose this over Aussie if I were trading it, because you have this kind of push from underneath. You're still below the 200 moving average, but if we have a weaker inflation picture in the U.S., we can come back up to the 64.71 area, right, or at least 62.67, which is this cluster support or resistance right there. We could come by, probably come back there. If CPI comes out hotter than expected, then it'll probably blow out these lows, and we can see the cascade below 60.76, right? Right. So watch that carefully. Okay, the big one that's got a lot of data coming out, other than the U.S. dollar, and we're looking at the euro, is the UK and the GBP, USD. That's the UK currency. And we can, let's push this out to our monthly chart. I'm going to remove all drawings. And we can see that after that really sharp movement we had back in September, right? It was a giant move for traditionally, the pound does not get this low, right? You have to go way back in time to you have to go right back to 85, right? And I mean, we had a crash in 1992 when George Soros broke the Bank of England, and he took it down from a high of 2.0128, and he took it down to like a 1.4. Yeah, and I think they put out a warrant for his arrest if he stepped on UK soil. I think a lot of people may want to arrest him now. But that's, I mean, the last low we had, that was like a 40, like not 40, but like 38 year low, or right, 38 year low. 38 years came right back to that low, and after we touch a low like that, we rallied significantly from that low, 105.68 we saw back in 1985. We rallied, some 9,000 pips from that, right? A little less than 9,000, like 8,700 pips. So if you get a similar rally, like filling in this, usually when we have this type of these bars like dropping like that, dropping hard, drop it like it's hard, drop it like it's hot. Okay, anyway, drop, right? Then we usually get a similar rally, a similar bullish rally to fill that. Now, I'm not saying that this can happen at one time. The dollar would something significant would have to happen to the dollar, debt crisis or something that could actually bring this up that sharply, right? This is what happened 38 years ago, right? And so we're looking for a similar move over time. Now, from 85 to like the peak of this was like 88. It took like 3 years for it to do it. So a 3-year rally, we're looking at this from time, right? That takes us into 2027. But as long as this low holds, then we have a target. After a double bottom, the target would be somewhere up in here, and that would mean something's would go on with the U.S. dollar in a very significant way, because it's GBP versus USD. So now that this is pushing it way out. Let's go down a weekly chart to Greg. That's really far away. Yeah. So we have other levels that we can look at that are a little bit more more down to earth. And we can see that we made that after making that low and pulling back, we had a double top right here at 124.37 in that neighborhood. Okay, so not exact, in the neighborhood. And we had a pullback, and price pulled back on this weekly. Let's go down to a daily. You can see that buyers are stepping in at another double bottom right here, right? And so we probably see a retest of 124.40 on the daily chart. So, well, Greg, daily so far away. Let's even just go to a 4-hour chart where the dealers live. You can see, big push down, and then we're hitting 200. So we expect some type of a pullback tomorrow, right? And then maybe that pullback, short term, very short term, maybe we see a short term pullback to maybe a 38% retracement, maybe 50% retracement, like 119.93, pull back to there, and then we can see a projection and take us out of this area, probably after CPI. If it, again, that CPI is higher than normal or higher than expected, we can see a retest of the 118 and a blowout to the south side, which is, I think, is unlikely. Bulls versus bears. I am short-term bearish, but I am medium-term bullish, okay, for the pound dollar. And just to get, we're talking about probably a 2-month rest for the dollar, while the dollar kind of digests all the gains that it's had for the past 6-7 months, right? Things don't move in a straight line straight up. And say, well, Greg, there's interest rates and there's this, but nothing moves in a straight line. There's usually a pause, and you can get long dollar all you want. If the market is already priced it in, you can lose money even though the Fed's raising rates. Okay. And you go, man, I thought the Fed was raising rates, so I went and bought the dollar Swiss and dollar CAD. Yeah, But you got to use your noggin when you're doing that stuff. You can't just blindly buy this because they say so, right? You got to look at what's going on. And for every push, there's always a pullback. So after a big run, there's profit taking. All the guys that got long are taking profits. They're going to get this profit taking decline in the US dollar. When they finish taking profits, you're going to get guys buying the dip on the dollar, and that's going to push prices higher. Okay. So we got this yin and yang and pullbacks, and so you got to get in the rhythm, okay? Because like you're trying to do the money dance with price, and your rhythm is off because you're selling and it's buying, you're buying and it's selling, and you're off. And when you're out of sync and you're not in rhythm with the market, that's when you lose, okay? So the whole idea is to get in sync with the market. When it moves, you move. When it dips, you dip. When it rises, you rise. And in fact, they even call this rhythm trading. Now, they also have a birth control method called rhythm trading. We tried that. It didn't work because I have twins. Okay. All right. So the pound dollar. Let's go ahead and look at what else is there on our docket. Nope, there's no other data there. I just wanted to take and the heat map started to light up with the yen basket in the top spot, 0.44%. Yeah, because it probably will do that during this time period. Because the yen is getting strong, Greg. It's like, yeah, watch it turn around. Okay. Oh, dollar yen. We can look at dollar yen. I mean, there is Japanese data. Again, I don't pull much. So we got this really big drop here in the big drop, right? And it's also yen repatriation. The Japanese fiscal year ends March 31st. So you're seeing a repatriation, a pullback in the strengthening in the yen. But this is just a seasonal occurrence that happens like every year. Yen gets weak going into the end of March, and then it flips around and goes the other way. All right, so let's see if your other yen pairs are acting similar. Yeah, this is repatriation. They call it repatriation flows. Okay, you can even go to Investopedia and even type in yen repatriation, right? And you can find out all about it, or you can take my course, right? And here's the so people borrow money in yen because it's cheap, and then they pay it back, right? So they call it repatriation trade. Look, 2011, it's been going on for a really long time, longer than 2011. It's been going on for like 72 years. Look, yen repatriation, 2014, right? Yen repatriation, what other years do we have here? 2022, yen repatriation. Right, 2020, repatriation, and here is an Investopedia definition. What is repatriation, right? And there's a definition there, or you can ask Chat GPT, right? So we have this wonderful push down in repatriation flows, and something like that, it's like you can almost hit that on the long side and look for a rally up from those lows. That long tail is very bullish, extremely bullish. And we can probably see a move from 89.20 up to 90.24 if you were so inclined to do so. Okay, so the yen is, this is don't look at this as some major move in the yen. It is a major move, but it's explained through repatriation. It happens every year usually. In which Japanese firms are bringing back yen assets and also putting them down for their close of the year, and then they'll redeploy those yen assets at the end of after March 31st. Okay, so let's look at the S&P 500, SPX 500, and let's take a quick gander. Powell came in there and he tanked the market really hard. One day, and then he comes back with the job number. He had access to the jobs number. He didn't open up the envelope and see that there was only 313 jobs created. So you've got this wonderful, like we've got this, we're basing is forming this base, building the base, right? Every day is building, is like building this bridge. This foundation is being built, solid foundation, so they can take it off and blow it to the upside, right? So we're looking for a push back up, based on seasonal patterns, takes us back up to the 47.91 area. Probably won't happen. I mean, it'll probably hit there by the fall, but there's some intermediate targets, 43.34, that we can hit in the springtime before we start heading down again for the summer. As people are putting their money, moving, they're going to the Hamptons, they're going to the French Riviera, they'll move back into the dollar, into bonds for safety. They use the U.S. Treasuries as their piggy bank, put their money in while they play in the sun, on the beach, and then they come back October 31st and redeploy their capital and start this process all over again and again and again. You've probably heard me say that year after year after year. And maybe it's starting to make some sense. Maybe I'm penetrating that coconut of yours and we're getting in there, right? If not, come to Vegas with the Mansion Mastermind, the Forex Trading Mastermind, where we'll master your mind at the Traders Mastermind. Where I'm Jonathan Ways, a world famous hypnotist for athletes and performers, and he's going to be our special guest, helping us hack the trader's mind. So you gotta be there. It's a Las Vegas Mansion Mastermind. It's going to be going on. It's nearly sold out. Few tickets left. It's going to be on April 2nd, 3rd, 4th, and 5th. And you got to be there, be square. It's going to be an awesome event. You'll be able to get all the recordings, and it's going to be a fabulous event with food, fun, and Forex. Where can you go wrong, right? Okay. Let's drop on down to a weekly chart, and we can see inverted head and shoulders, kind of, sort of. You can see we had a rally there, and we've got a little harami there, and we have this rising trend line, and testing the trend line would be okay. It would probably all depend on what's going on with the CPI, and we look at what's going on here. We can see that just cracked the 200 on the daily, right? And then we came up. So we have a rising trend line, a new rising trend line that was formed, because now we have a new candle on the other side of this candle. So this is bullish. And bulls versus bears, I'm constructively bullish on the S&P 500. We can look at the NASDAQ 100, NAS 100. We can take a quick look at that, and we can see a similar move. I actually like this one better because it's got this vertical pullback, double bottom, side by side, like candles there, side by each, so like a railroad tracks, as old Peter Bang would say. And then we look for maybe a launch. CPI data comes in less than expected. We can see a launch from this area. They've already, someone's already read the envelope and knows what the number is going to be. And so you're going to see positioning happening here, right? And so you go down to a 4-hour chart, and you can see buyers stepped in. Buyers stepped in at the close of the market. So they've already, so bulls versus bears, NAS 100, I'm bullish. Okay. Let's take a look at gold, XAU, USD. And you can see XAU is on fire. And I was telling people, there's gold in them there hills. And we're moving on up like George Measy. We're at the 1882, nice support there at the 1810.25 area. This is Fibonacci support. Buyers stepped in there, and now we are off to the races. I'm looking at a retouch of 1961-64, bulls versus bears. I am bullish gold, and you can see that we broke a trend line, a breakout on gold, breakout from a downward trend line, and I'm looking for that retest for prices to continue. We got a nice base of operations there, the 1810 area, and so I'm looking for this to rally, to continue in gold and back up. So we probably got another $70 move in gold. Okay. Let's look at oil. US oil. I haven't looked at WTI in a while. And it's the summer driving season, guys. And you can see, like, I know I'm spoiled here in Texas. I pay $2.68 a gallon for gas. Don't hate me. But $2.68. And I'm seeing some gas stations, we crossed 313. So that's telling you that the summer driving season is starting. You know, they were switching from producing heating oil to rebob. You know, unleaded fuel, unleaded futures are probably up too. So we're seeing a demand for oil, and reopening of China. So we might see a move higher, bulls versus bears. I'm cautiously bullish, but we do have lower highs and lower lows, but we have some higher lows. We have these higher lows, but we have these lower highs. So we're in this indecision area, which we really need to break. We need to break some old resistance for me to be bullish. We need to break 77.35, and then we need to break 77.97. And if we did that, then we could get a sharp move to the 80.92 area and back up toward the 82.53 area. So we got two significant areas. Now, if we don't, and we start heading back down, then we blow out this low here. The floor is at 74.75, and we could blow that out. And but we've been kind of consolidating, basing in this area. Lots of support in here. And so bulls versus bears, I am cautiously bullish on oil, right? Because oil is denominated in US dollars anyway, and the dollar, if dollar is weak, then usually the commodities are also going higher as well. I'm mentioning rebob. This is gasoline futures. Can we get continual contract? There we go. This is unleaded fuel. I don't know. I normally don't cover that. I haven't covered it in a long time. Look how long ago again I drew that rebob. Okay, remove all drawings. And you can see that we are starting the summer driving season, and we're starting right at the 61% retracement. That was a 50% retracement, 2.30, and we can see a move back up toward the 4.2631. That would be not too good, right? For drivers, right, who are already paying a lot. So that's then we can drop it down to a weekly chart, and you can see an inverted head and shoulders there as well on rebob. Again, rebob is unleaded fuel, and the stuff that Governor Newsom in California they want to get rid of. If you're getting rid of your gas-powered Lamborghinis, you can hand them my way. I'm here in Texas. I'll gladly help you reduce your carbon footprint by taking your Lamborghini off your hands. Okay, just kidding. It'll be a cold day in Texas before we go all electric. Okay, let's go ahead and go daily, but you never know, Okay, so there we go. Those are head and shoulders. Looks fairly bullish on this. Okay, let's go to Bitcoin. Okay, we'll go BTC USD. Could be, this could be a turning point for a Bitcoin to the upside, and it was, right? All you gotta do is follow the dollar, guys. Follow the dollar, and you'll find out where this thing is going. If you're confused, then follow. You can see that. Look at this compression, big bullish move, compression. Let's move out to that's the monthly chart. Lots of support. We came down to the 15,721 area. Let's go down to a weekly chart. You can see, we got our push down a daily chart. I said if we break, we would go lower, and we did. We broke the trend line. We did go lower, much lower. We went down to the 19,600 area. This is extremely bullish, though. Morning star pattern at the I believe it was the Fibo. No, it's a 200. off the 200 on the daily chart. Trend line break. This is this is good stuff for the Bitcoin bulls. Again, we can see a rally back up to 25,455 on Bitcoin. So, and we would retrace all of this drop, which would be very nice for the bulls. Maybe, take us back into the consolidation area. 28,293 is where I would look at getting in. I would like to see a pullback tomorrow, a little bit of a pullback, and then being able to lock though, because now you have like an inverted head and shoulders pattern here. You've got some type of a shoulder, head, shoulder, right? So you have this kind of a inverted head and shoulder kind of pattern right there, where we could really do a substantial move to the upside, like seriously a $7,000 move in Bitcoin. Okay, guys, that's it for me. I want to thank you so much for being here for Bulls versus Bears. And remember, why buy and hold when you can Pip and Run? Come on over to the Las Vegas Forex Mastermind. Also, if you are interested in mentorship and you can't make it out to Las Vegas, you can also get a streaming ticket, and that will give you access to all the videos and recordings as well, to all the training and also live trading as well. I'd love to hear from you. Type your comments in below. Make sure you like, subscribe, and share this video if you found it helpful. Tell a friend. Take care. This is Dr. Greg McLeod from Elite Traders University saying peace and pips. Ring that bell. I love you guys. God bless.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!